Hi, this is John Summers at FMA, and the purpose of this video is to walk you through the cash flow projection template that is available for download on this website. Good cash management, of course, is essential for a nonprofit organization, just as it's essential for any business. So this tool is intended to help nonprofit leaders, financial executives, and CEOs to project and monitor their cash needs over the course of the year so that you can plan in advance for any issues that might need to be managed. So let's start with a general overview of this tool. So what it will do is basically provide a snapshot of your cash receipts for the year. That's in the first section. And the next section here is for cash disbursements. And then there's a third section that deals with cash flows from capital and financing, so there'll be some receipts and some disbursements there. And what you will get from this on a monthly basis is that you will be able to see your net cash excess or shortfall for that particular month. And then at the bottom you will see your cash balance for that month. And the goal, of course, is keeping that rolling cash balance at a comfortable level throughout the course of the year. So now let's talk about how to actually use this tool for projecting and monitoring your cash needs in your organization for the year. So first of all, you'll see the key here in the upper right corner of the spreadsheet that shows us that the yellow cells are for input for the data entry, and the gray is for output cells. So that's the first important piece of information, is only use the yellow cells for input. And the first yellow cell is the name of the organization. So you'll put your organization's name there. For a demonstration, we'll just make one up. So we'll say the ABC organization. And then the next input is this fiscal year begins. So it's set by default to January, but you can actually, by clicking on the drop-down, you can select any month of the year. So let's say for this, again, you want to pick the month in which your fiscal year begins. A lot of nonprofits have fiscal years that begin on July the 1st. So for this demonstration, let's just put July 1st. And what you will see has happened is that will automatically create your flow, create the months across the top of the projection spreadsheet based on the first month of your fiscal year. And then the third piece of kind of background information that you will input into this spreadsheet is your beginning cash balance. So in other words, the closing cash balance as of the end of your prior fiscal year. And for a lot of people, you might be working on this before your previous fiscal year has ended. That's probably a good idea to plan ahead like that. So you'll want to put in, a projection of what you think your closing balance will be, and then when the year is actually closed, you can go back and update that based on the actual. So again, here let's put in, just for demonstration purposes, we'll put in 15,000. And then if we scroll to the bottom, you'll see that has automatically created a rolling cash balance for us across the year of 15,000. Obviously, that's just based on your beginning balance because we haven't entered any receipts or disbursements yet. So that's the next thing that we will do. And one thing that you will want to have with you when you do that, when you begin to put information into this spreadsheet, is your organization's budget for the fiscal year, because the information about all these receipts and disbursements is ultimately going to be based on your organization's budget. So let's come back up to the cash receipts section here, and this is where we will begin to enter data that will show us the cash position for each month of the fiscal year. And you'll see there are several categories here for typical line items in a budget. So you'll put in your budget for the relevant line item. So over in column E for the current year budgeted. So for foundations, for example, you would enter your foundation grants into this line. And if you have more than one foundation grant, you'll notice these plus box buttons over here on the left. So you can click on that, and you can see you can have some individual line items once you click that to expand that category. And if you have more than one foundation grant, it's a good idea to enter those separately so you can sort of keep it straight when you're looking back and monitoring this. So let's say, and you can just overtype directly into these cells. So let's say we get a grant from the Wallace Foundation. So you can type Wallace Foundation into that cell, and let's say that grant is budgeted at $100,000. And then you can enter $100,000 there, and then let's say we have a grant from a local foundation, and that's budgeted at $25,000. And so you do that for each of your categories of receipts. So corporations, for example, here again you can look at the plus button below that line if you want to expand that out any further. Individual contributions, again, there's the option. If you want to add additional line items that is not accounted for in these categories, you can click that to add some additional line items there. Similarly, government contracts, federal, state, and local, those are all expandable. And then we have some other revenue categories, and again, if you just need to expand out to add a few additional line items or categories, you can click to expand there. So again, for our demonstration here, let's say that we get $15,000 in individual contributions. Let's say we have one federal contract for $50,000. And let's say we have a special event that brings in $10,000. So we enter each of those items into the budget. And then for these categories, lines 55 and 56, if you happen to have any receivables that you're carrying forward into the current fiscal year, you would enter those items here. And again, now this would be items that are not technically in your budget because we're budgeting on an accrual basis. And so this would be for a service that you performed and so realized the revenue for in the prior year, but the cash itself hasn't come in yet. So let's say that the organization did some service in May of last year and billed for it in June, but the cash itself hasn't actually come in yet. So let's say we've got something like that. We had a contract to do something for $5,000. We billed for that, but the cash has not come in yet. So it's not part of your current budget, and you'll see it doesn't total into your budget for this year, but it will be part of your cash flow for this year, so we want to account for it on this spreadsheet. So the next thing we will want to do once we have all of our receipts budgeted for the year is to go back into these monthly columns and spread the cash receipts across the year based on the month that we expect the cash to actually come in. So let's go back up to the Wallace Foundation grant, and let's say that that grant comes in October of every year. So we'll put the $100,000 in October. And for the, let's say the local foundation gives us 2 installments of $12,500. We get one of those in September and one of those in March. And so you'll see these totaling over here in the total column on the right as you add them into each month. And one check, if you look in the variance column while you're filling out the spreadsheet, you'll notice if there is no variance, so in other words, if you spread the entire budgeted amount across the months, then this variance column will show a 0. That's kind of a way to check that you have, in fact, allocated all of your costs, all of your revenues into the appropriate month. So one other, you also have a thereafter column here. So if you happen to have, again, budgeting on the accrual basis, if you happen to have a budgeted item that you don't expect to collect in the current year, so for example, a service maybe that you'll provide late in the year but won't actually realize the cash, or won't actually receive the cash until the next fiscal year, then you could put any amounts there into the thereafter column. So then we will spread the rest of our revenues out in the same way. So we've got individual contributions here. Most of our individual contributions will probably come around the end of the calendar year as people start to get in the holiday spirit or start thinking about their tax deductions. So let's say we get $5,000 in November and December, and then let's say we have a annual appeals letter that goes out, and we start to collect some cash from that in May. And let's say we have our contract payment in October, and then special events. We'll have a golf tournament, so we'll do that in August. And then this receivable we're going to collect, let's say, in July. And then we can scan over into our variance column again, and it looks like we have allocated all of our receipts into appropriate months, so that should finish us with the cash receipts section. So then we'll come down and do something very similar in the cash disbursements. So we will put our budgeted amounts here in column E. Again, we've got typical line items for personnel, for OTPS lines. Again, if you want to expand this out to have some more options, you click the plus in OTPS. So salaries and wages, payroll taxes, rent, utilities. Again, similar to the prior year receivables above, we have a line for prior year accruals. So if there were items budgeted, expense items budgeted last year that you didn't actually send the cash in until this year, you would put those items on this line, and again, additional lines there if necessary. So let's go ahead and fill in some budget numbers here. Salaries, let's say we have $120,000 in total salaries. That'll give us about $8,000 in payroll taxes. Say $15,000 for medical. We'll do a $5,000 pension contribution. Again, you can add additional categories if you want. Come down to rent. Let's do $24,000 for rent. Let's do $2,500 for utilities, and so on, until you've basically accounted for all of your planned disbursements for the year. We have that golf tournament, so let's put $2,500 as a cost for that, for the special event. And so again, on the disbursement side, you'll want to spread all of those budgeted disbursements into the appropriate months. And so one thing I want to bring your attention to is this column F, spread evenly. So what this does, and you'll see the instruction there when you click on this column, this is in case you have a disbursement that's basically a recurring item over each month of the year. So rent is typically a good example. In many cases, salary is basically a recurring item that doesn't really change that much from month to month. So in those cases, you would just select yes from the drop-down menu here, and then you'll see that it will spread that $120,000 equally over the 12 months of the fiscal year, so in this case $10,000 per month. So let's say salary, payroll taxes, and medical benefits, we're going to do that. We'll have our pension contribution be a one-time thing in December. Rent, again, will probably spread evenly, so we can do that. Utilities, also we can say spread evenly. Spread evenly is also an option up here in your receipts categories. It's just not quite as common to have sort of a regular payment coming in every month, but if you do, then that option is available here as well. And let's see, the special event is our golf tournament, so we'll put that in August. One important thing to note is that we don't have non-cash budget items or other items that don't affect cash flow as part of this template. So depreciation, for example, depreciation should be an expense item in your budget, but it doesn't directly affect cash, so we're not building it into this cash projections model. So for those sorts of reasons, this cash projections template and the budget totals that you see in column E might not reconcile exactly to your board-approved budget, but the budget should still be the framework for projecting out these receipts and disbursements. But you might just notice some small differences on things like depreciation expenses or transfers from temporarily restricted assets or that sort of thing that won't directly affect your cash flow. So that gives us our operational receipts and disbursements for the year. You'll see at the bottom there's also a section for capital and financing related cash flows, so you can add in any receipts from loans or credit lines or transfers into your cash account from your savings investment accounts, or also disbursements in the form of capital purchases or repayments or transfers out to your savings and investments. I'm not going to enter anything here for our demonstration, but again, it works the same way as the items above. You'll enter a budgeted amount and then you'll spread the cash flows into the appropriate months. So once you get all of your receipts and your expenses plugged in for the year, you'll see your two output lines here at the bottom. Line 112 is going to show your net cash excess or shortfall for the individual month. And then the final line, line 114 here on the bottom, will show you your rolling cash balance for each month. And so you'll see in the example that we've put together here that although we're projecting a cash surplus for the year as a whole, that's here in this cell, the total, we see a $28,000 surplus. And we've got a large cash influx here in October that looks like enough to carry us through the rest of the fiscal year. We have August and September. These 2 months are showing that we're not going to have enough cash to cover our disbursements in those months. So this is obviously a red flag that we'll need to address before we get to that point. So maybe we'll take a draw on a line of credit in July, and again, that's something that you would also want to enter into your template. So maybe we take $5,000 in July and then pay that back in October. I'm sorry. And then, note, of course, that will probably give you an interest expense as well that you would want to account for. Or maybe, we have other options. Maybe one of your board members is a member of the golf club that we're having our event at, and he can sort of help us push that expense back by a couple of months. So if we change that into, say, October, then we're at least in the black. This $125 in September is probably a little bit too close for comfort. But again, the point being that this spreadsheet gives us, is going to give us a little bit of an early warning if we need to address any cash issues, so we aren't faced with that crisis to manage at the last minute. So that basically completes your initial build out of your cash projection spreadsheet for the year. But in order for this to be a really useful tool for ongoing monitoring of your cash position, you actually also need to keep it updated over the course of the fiscal year. And you do that by inputting the actual results on a monthly basis into this same spreadsheet. So once you finish a month, what you should do is come back to this tool and make any adjustments to the monthly cash spreads based on what actually happened in that month. And if something changes, then at that point you need to make the decision as to whether it's simply the timing has changed or the fact of that receipt or disbursement itself has changed. So let's take one example. Let's say that that prior year receivable that we had budgeted here in line 56, we had expected originally to collect it in July. July happens. It turns out that it didn't actually come through in July, but we got a call from the group that we provide services to telling us, promising it will come in August. So at the end of July, we will remove it from that column, and we will move it over into the August column, and you'll see if you go down to the bottom, that makes our cash position for July a little bit tighter. But again, we keep it in the budget. We just simply shift it forward by a month. Let's say that something else happened in July at the same time, and we get a contribution, let's say an individual contribution that we hadn't been expecting. Say somebody learned about the organization in the newspaper and thought we were doing great work and sent us a check for $1,000. It's always nice. So we put $1,000 into the column, into the July column for individual contributions. But since we're still expecting the year-end contributions to come in as they usually do, and the appeals letter to go out in May, and it'll get its contributions, we're not going to change those. So essentially, what that's going to do is show a positive variance over here for the year of $1,000. So we'd only expected $15,000 when we did our original budget, but we got this extra $1,000. We put it in July, and it shows up as a positive variance over here at the column on the right. So now let's take a different type of example. Let's say our local foundation that we were expecting to get $25,000 sends us our check in September as we expected, but that due to some sort of circumstances they're not going to be able to send us the other half of the grant that we had expected for March. So when we get this news, again, as we're updating this spreadsheet on an ongoing basis, when we get this news, we will go ahead and delete this expected receipt from the local foundation in March. So that, again, changes our overall projection and gives us a variance of, in this case, a negative variance of $12,500 on that item. And this also starts to give us, a sense of where we are overall. So with just those changes that we talked about, that will create an overall negative variance of $11,500. And again, you'll want to do the same thing every month on the disbursements side. And those are particularly important as that can vary pretty widely based on timing factors. So again, you want to make sure that after the close of each month, you go back into this spreadsheet to update actuals each month for receipts, disbursements, also the capital and financing section. And once you make those updates based on the actual results, the bottom line will update automatically and show you what your overall cash position for each month looks like. And that, again, is how you can get a sense of any upcoming challenges or issues that you might need to address before they become a cash management crisis. So again, that's in general how you can use this tool for planning and monitoring your organization's cash position over the course of the year. I hope this is helpful to you in running your organization. And remember that you can find many other useful tools for strengthening your organization's financial management on the Resources for Financial Management section of the Wallace Foundation website. This is John Summers at FMA, and thanks for your time.